how to maximize returns with Yieldmax on the capital gain side. So yes, we earn these dividends of over 685,000. So call it around 700,000 per year in dividends. But we also want to outperform on the capital gain side. We're up 25,000 today, or 1.41%, which, as you can see above, beats all of the indexes. So the Dow's up 1%, the Nasdaq's up 1.4, and the S&P is up 1%. So we're up 1.41, beating all of the indexes when you factor in margin, especially because with margin, that helps us live financially free from a 9 to 5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. You can also head over to my website, unconventionalwealthideas.com. All right, so again, we have a big show for you today, and I wanted to show you just complete view. If you go over here to my complete view, you'll see percentage gain. We're up 1.8%. So if you look above, the Nasdaq's up 1.47, we're up 1.8, beating all of the indexes on the capital gain side of things. All right, because that's really important. We can get all these dividends of over 600,000, but and they're helping us live financially free from 9 to 5. And I don't know why members thought, some members, not members actually, but just viewers who are not members of my channel, they're saying, oh man, you're just bashing Yieldmax. You're just coming out here and saying you should be getting capital gains from Cornerstone and the leveraged funds, triple C's, Cornerstone being the C's and leveraged funds being leveraged index funds. Well, I was saying that I love Yieldmax. I don't know where everyone had that disconnect. I love Yieldmax's dividends. They're helping us outperform the market. We're up 11% for the year now. Okay, 11%. The S&P is up 0.91. So the Nasdaq's still down 0.4. The Dow's down 1%. The Russell's down 5. So we're beating all of the indexes with Yieldmax dividends. But we're also getting these capital gains, which add to our performance, obviously. And so we want best of both worlds, because the way to get real doubles, as we described in the last video, is from compounding, okay? Excuse me. Compounding is the way to get those exponential returns. It's the ninth wonder of the world. So you need these days gains, and we're going to talk about 5 ways to get these days gains. We're up 26,000. What's this due in part to? Obviously Cornerstone, okay? Cornerstone CRF is up 0.66. Earlier today, it was up over 1%. Yesterday, it was up huge. The market was not. So we had outsized gains due to the recent Cornerstone bounce. Look, Nvidia makes you a lot of money, okay? I know people who made thousands of percent returns with Yieldmax. Look at this, with Nvidia, the stock itself, not Yieldmax. Look at this chart, okay? On an all-time time frame, exponentially up. So if you had 10,000 invested in Nvidia, you'd make millions of dollars over the long term because of compounding that 10,000. So here's a 1-year chart. It made it back to the highs, Nvidia. But Nvidia obviously did not make it back to the old highs. And so this is the problem with Yieldmax. Is I love Yieldmax. I don't know why you think I don't like Yieldmax. I love Yieldmax, Roundhill, Cornerstone, Defiance, all these high yielding dividend ETFs, because we're growing with these dividends that are also paying down margin fast. So that's adding to our performance. All right. So these dividends, these 700,000 in dividends, which they're between 6 and 8 every year. So let's just last 2 years. So let's just say 700,000. They're paying down this margin debt so fast. Okay. The margin debt's paid down in less than a year. And that's acting like another account that's growing for us, as I always say. So we're getting our growth from Yieldmax dividends that are snowballing and paying down our margins so fast. This is just extra growth we're getting without the risk, because there's no risk of a margin call if your dividends are paying it down so fast. The problem with Nvidia, okay, we love the dividends. Let me establish that. But the problem with Nvidia is the fact that it's a stock and that it has maintenance. Okay, so my members know that I'm a big maintenance guy at my channel. To live financially free, you have to access the equity in your account. And Nvidia has 50% maintenance. And there are 2 reasons why this is bad. Okay, for one, if you put all of your money in Nvidia, you'd suck up half of your equity, which would put you close to a margin call. You wouldn't have the ability to withdraw out of your account. I take my E-Trade card and I swipe it and I go wherever I want in this world. I withdraw out of my equity here. and I add to my debt there. And then my dividends just pay it back at the end of the week now, because we have weekly paying dividends. But if you put it all in something like Nvidia to get that compounding power, which I agree, I applaud you. You should maybe explore putting all your money behind something, but it can't be, because you need compounding power and you need all of your money behind something to really make that difference. Unless you have a ton of money, then you can break it into a few different plays. But if you want that compounding power and you don't have a huge account, you're going to have to put the majority behind something to make that easy money. Again, what's easier? 10,000 made on 10,000 invested, which is 100% return, or 10,000 made on 100,000 invested, which is a 10% return. And then you compound that up from there. All right. What's easier? Obviously, putting all your money behind something. Putting all your money behind Nvidia would have been a great call over the last 10 years, but you never know with a stock, okay? So the first reason why this is a problem is because we have high maintenance and it sucks up half of our equity. If you need help understanding maintenance, that's in my volume 3 e-guide. The second reason why this is a problem is because obviously if you put all of your money behind one stock, it can crash. You never know what can happen. You remember the DeepSeek AI threat, which wasn't a threat, but you saw how the stock reacted nonetheless, Nvidia stock. So you have to really time these right. You have to play these stocks right. 90% of traders lose over time. So you have to put all of your money in the indexes. And that's why I go with Cornerstone. And I'm not going to talk about Cornerstone much today. We already know that in the last video, Cornerstone was the cornerstone of that video. And it's just been blowing away the indexes over the last 2 days. It was up bigger today even. We were up 27,000 earlier today. And now we're up 25, 26. Maybe that's because Cornerstone had an intraday pullback. But so you see on this one day chart, it was up a little bit more than this. But anyway, it's up 0.66%. It's not beating the indexes today quite, because yesterday it had a big day. Look at its chart here, 5-day chart. I told you Cornerstone usually precedes what the market does. Okay, it's usually a foreshadow or a precursor of what the market does. So here's that big run from Cornerstone, and it's giving you a 20% dividend, and the dividend is dripped down at the NAV for 19% gains every month. Here are those gains. Okay, we're at 17.78, but we've seen premium gains as high as 30%, 40%, even 45% over the last 5 years being in Cornerstone. All right, so we're getting the 20% dividend per year. We're getting the day's gains each day, the day's gains potential, which yesterday blew away the market, as you can see here by the chart. And we're getting these 17.7% returns every month on top of the 20% dividend and the day's gains. So Cornerstone is the best out there because there's no other index fund out there that has this yield that Cornerstone has that also moves up left to right on its chart. Now, a lot of people say, well, it decays. Look at an all-time time frame or a 5-year chart. First of all, this all-time time frame, this is before 2008 when they restructured, but it's been around since the 80s. It is a 4-star fund, so it can't be, as alarming as it looks on its chart. Look at what it did on a 10-year chart on Morningstar. It moved up or left or right. So I don't want to hear that argument that, oh man, Cornerstone moves down on its chart, okay? Because that's just, just a misinformed opinion there. And you have to look at what we did before the rights offering, okay? Cornerstone gives you the dividend, it gives you the drip, and it gives you day's gains. And look at what it did between the rights offerings. It gives you rights offerings to level up. That's how I got from 15,000 to $1 million. I always tell all my members. But here, you rode this chart up from 750 to 950 with the 20% dividend, with at that time 37 to 30 or 40% drip gains per month. So my members and I were really cleaning up in this. And we lightened up here at these highs. We were boxing Cornerstone. I tell you how to play Cornerstone around the premium thresholds and rights offerings in my volume 4 e-guide. And I talk about how to box Cornerstone and play the other side in my volume 5 e-guide. A lot of people don't talk about volume 5, but it's a very important e-guide of mine because it's how I hedge and protect myself. It's how I insure my entire account against a major market crash. It's how I use this margin and never have any fear because I'm always hedged, okay? I'm always hedged to the downside with all kinds of shorts, and they're all in volume 5, including how I box Cornerstone. Cornerstone, when I box it, it also lowers my maintenance to 5%. Okay, so Cornerstone has 30% maintenance, and Yieldmax stocks like Nvidia have 50% maintenance. And when you box Cornerstone at the highs, it lowers your maintenance to 5% once again. So Cornerstone, we sold right here. I had another comment in the last video. They said, I'm skeptical that you could sell right there. Well, right there is where we got our Discord announcement, and I forgot to open Discord again in this video, but we have the Cornerstone rights offering announcement and the N2 filing here in Discord. So that's why our Discord chat room is the best in the world, because we have over 2,000 members in it who are very savvy. Some of them are much more wealthy than me and are much more successful than me, and I learn from them. And we all play Cornerstone properly around the rights offerings, okay? And so we give you that alert in Discord, and that N2 filing came out right when this high was met right here, okay? So we sold, we got the N2 filing right here, we sold right there, and then you reload at the bottom, okay? And you do it all over again, and that's what Morningstar doesn't quite factor in. You could do better than these returns on a 10-year time frame if you play the rights offerings properly. Once again, in Cornerstone, it's not just the rights offerings, it's the premium thresholds, because there was no rights offering right here, okay? But you still had high premiums that you needed to take account for, and that's why we were boxing over here and making money, you know, on both sides. All right. And so it's very important that you understand the premium thresholds. If you want to play Cornerstone, you can't just buy and hold this thing. You have to make sure you're playing it around the premium thresholds. All right. Now, Cornerstone's how I really compounded my money. Why are we talking about Cornerstone? For two reasons. You put all of your money in the indexes. This is where I left off with Nvidia. You want to put all your money in an Nvidia. I get that, but it could crash and burn. You never know. You have to put all your money in the indexes for compounding as a result. Nvidia sucks up half of your maintenance, and Cornerstone's only 30% maintenance. And if you don't understand maintenance, that's in volume 3. And Cornerstone is the index. So you have the safety of the indexes with Cornerstone. And then the key with Nvidia to get your compounded dividends, which you can compound your dividends with Nvidia. You cannot compound your gains with Nvidia like you could Nvidia. And again, you don't want to put all of your money in Nvidia because it's a stock. You might lose if you're just now joining this live. And this Nvidia example applies for all Yieldmax stocks, especially the Mag 7 names. All right, you can't put it all in one of them or even 7 of them, because sometimes tech has a terrible year and, you know, the rest of the market's rotating to other sectors of the market. So you have to have a fully diversified approach with the indexes. And so if you're going to go with the indexes, where are you going to go? You're going to go to SPYI, which we already discussed in the last video, decays and did not make it back to the old highs. It doesn't have enough yield to help you survive on. Cornerstone has 20% yield, SPYI 10 to 15. It also doesn't drip you at the NAV. It also doesn't have an RO opportunity, which tells you when to sell, unlike the market itself, which you never know when to sell. So we can't go with SPYI. Look at JEPI. You can't go with JEPI. Look, it didn't make it back to the recent highs here or the all-time highs there. And I know a lot of people who love JEPI, okay? They love the Schwab Ds, the JEPIs, and look at Schwab D. It hasn't come close to its old highs either. So these decay with only a 4% yield. I mean, this is a travesty. And yet we're using Nvidia as our growth vehicle, but we're not getting the compounding from Nvidia, which is another travesty, okay? This is a major, I don't know, let down, okay? If you're an investor and you're trying to really make money in the market, you want to know where your wealth is made. It's made from compounding. So you're missing out on Nvidia's gains because you have Nvidia. Now, don't worry. We're going to talk about how to maximize Nvidia, but still, nonetheless, and I see your PayPal, Ryan, okay? Thank you. I'll get to you after this video. Nonetheless, with Nvidia, you can maximize returns, all right? Now, we have to really consider our risks when we're using Yieldmax with margin. All right, now this margin, I already said we can't use too much Nvidia because of the maintenance and because it's a stock. We you know, it has stock specific risk. But if we're using margin, you especially can't afford to do something like that. So you have to risk it more into the indexes, like I was saying with Cornerstone. But you also have to use margin to get ahead, because all of the greats use debt to get ahead. Okay. And without debt, you really can't beat inflation. All right. So if you're just going with the indexes themselves, they average 7 to 10% gains per year. And you want to withdraw 5, as we always say, the 5% rule. Well, you're not saving much if you're in the indexes. You have to get your growth from Nvidia. All right. Nvidia and Mag 7 names like Nvidia. But we're not getting growth from Nvidia because we think that our dividends will suffice with Nvidia. Our dividends are great for Nvidia because they pay down our debt, they lower our margin, and they grow our performance. They also qualify to banks for loans. All right, that's why we need these Yieldmax dividends, because we can go qualify for many kinds of loans now and open up our life thanks to this qualifying income that replaces our pay stub, our 9-to-5 pay stub, our W-2 form. So you need dividends, and you need Yieldmax dividends to live on, to pay your bills. You need dividends to qualify for more loans, and you need dividends to pay down your margin and increase your performance that way, all right? Because we use margin to get a performance. You also want your dividends to pay you in a downturn. Nvidia won't pay you in a downturn, all right? So that's really 3 reasons why you can't own Nvidia, okay? Nvidia, because we want the compounding. You're not going to get the compounding from Nvidia, but with Nvidia will not pay you in a downturn. It has stock-specific headline risk, and it still has maintenance, okay? It has lower maintenance. Nvidia has 30% maintenance versus Nvidia's 50% maintenance. It still has lower maintenance, but if you put all of your money in that, it's going to suck up a lot of your equity still, and you have all that risk with one stock. And so you can't do that. You have to put it in the indexes. Once again, we keep circling back to Cornerstone and the triple C's. It cannot just be Cornerstone, because Cornerstone has a mind of its own. And, between these rights offering periods, you still want to have your index exposure on. So it has to be the triples and the C's. Cornerstone being the C's, and the triples meaning, the leverage ETFs that I use. And you can't just buy the leverage ETFs because some of them decay, okay? Like a Soxel. Soxel is our semiconductor exposure. Look at it on all-time time frame, it decays. But go look at something like Avgo or Nvidia. I just showed you Nvidia. Go look at Broadcom, Avgo, and Soxel decays. So you have to go with the indexes that don't decay. You have to go with the triple leverage ETFs and the indexes that don't decay, A. And then you have to watch your position sizes in those triples, B, to manage risk. And then you have to delever and use them properly in a downturn so that your margin is never a risk, okay? And that's how we blew away the markets. During the downturn, we outperformed the NASDAQ even with 400,000 of leverage, and now we're outperforming the NASDAQ. It's negative, and we're up 11% thanks to the triple C's. If you need help understanding the triple C's, that's in my Volume 7 e-guide. And it's my latest e-guide. It's my best e-guide to date, I think, because it's a comprehensive e-guide. It has everything else in it. It has Yieldmax, Defiance, Rec Shares, how I play all these funds, how I use my latest strategies with options, okay? So it's kind of like a summary of 1 through 6, e-guides 1 through 6, but it's a slight summary, but it's more of an update on all those strategies. A lot of people ask, can I just buy Volume 7? You need 1 through 6 to give you the details and the foundation for how I invest in the indexes with margin and do it all without the risk. And then you need Volume 7 if you just want to push it and get more gains out of your account. All right, these compounded gains that we really need. All right, that's why we're up 11% for the year. Triple C's, everyone always asks me, what are they? Again, triples are these leverage ETFs, and the C's are Cornerstone. So I have one way to get more growth for you with Nvidia, and that's what I just said. That's Cornerstone. All right, and we have the triple C's, okay? So we have one, and then, call that 2 different ways right there to get more growth, more capital gains growth out of your Yieldmax stocks. Third, you can always just drip Yieldmax, okay? You drip Yieldmax, you buy them at the lows, and then you sell the rips. For example, if we were to go to Nvidia, okay? You would drip Nvidia, and then you would sell the rips, okay? So you buy the dips and you sell the rips. Very simple, okay? We've talked about this in past videos. You can increase your capital gains performance, obviously, if you buy at the lows and sell at the highs. But the problem with that strategy is that you lose your income when you sell at the highs. You also lose your ability to get your compounded exposure. See, look, Nvidia still moves up with Nvidia pretty well, okay? Nvidia is up 1.64. Let's look at Nvidia. Nvidia is up 2.33. So you're still getting your exposure to days gains with Nvidia through Nvidia. Okay, you're still getting your days gains exposure. It's just that you wipe all those days gains out when you have the ex-dividend date. So you still need to hold Nvidia, and it's hard to buy the dips and trim the rips in Nvidia because A, you're going to lose your qualifying income. You're going to lose your ability to pay bills, obviously. And then C, you're going to lose your compounding ability on a day's gains ability. Okay, so you just want every day, first of all, you want your day's gains to correlate with the market. So you get your day's gains like we're up 25,000. Let's refresh this. Let's just see what the market's doing right now. We're up 26,000. Okay, and you want these day's gains on a daily basis with Yieldmax so that you're getting that performance. But then again, it's wiped out after the ex-dividend date, all right? And so you have to somehow still get your compounding from somewhere. Look, we have these gains from Nvidia, and then they're wiped out after the ex-dividend dates. That's why Nvidia did not make it back to the old highs for many reasons. So even though you can drip your dividends with Yieldmax, and they would increase your capital gains ability, buying low and obviously trimming high, you're going to lose your qualifying income. You have the time, which is tough to do. And you're going to lose your compounding ability on a day's gains basis, not on a yearly basis, because we know we won't compound on a yearly basis. If you trim out and you keep taking profits, you're not going to have as big of daily compounding power, days gains potential, okay, for your daily compounding. But you also want that daily compounding to turn into yearly compounding. All right, so you get half of that with Yieldmax. We love the dividends. We love the qualifying income. We love how it pays down our margin debt. We love how it gives us days gains exposure. All right, and we get participation with Nvidia. And this is not just Nvidia. This is all Yieldmax stocks. But we want to continue getting the compounding for the long term. All right, now how do you do that? We already discussed Cornerstone, which is volume 4 if you need help playing Cornerstone. And even if you don't need help playing Cornerstone, I suggest that you get Discord access somehow, some way, because we alert you of the Cornerstone rights offering announcement, which we already said. But it's important to note that I actually use the rights offering announcement here in Discord to make my decisions, okay, in the market. I also use the news feed here in Discord, and I use the opinions of our members here to gauge how the market's doing, okay? When everyone's obviously scared, okay, well, then I do the opposite. But my members are actually a lot more astute, and, I really watch my members for when we have new Yieldmax funds launched. They always tell me about new funds and how they kind of feel about them. They watch other channels, and we kind of compare all of the different channels here at my Discord channel. But the best reason to have Discord, in my opinion, is for that Cornerstone rights offering announcement and the N2 filing that we get there automatically. It's automatically updated there thanks to Gains and all of my admin there. So even if you know how to play Cornerstone, I would suggest having Discord anyway. And for those members who don't like Discord and they're more old-fashioned, I have my SMS alerts as well. So we can get our gains from Nvidia through Nvidia, but those are only our day's gains, not our yearly compounded gains. And we really can't drip these because I just told you the conundrum with dripping. And also, dripping is a risk because you're going to be dripping these artificial lows. They're not real lows, so you can never really compound your dividends. Okay, we know we can't compound our Yieldmax gains. We get daily compounding gains, but not yearly compounded gains. But we cannot compound our dividends with Yieldmax in funds like Nvidia because you have to drip every dividend to compound your dividends. But you don't want to drip every X date because sometimes Nvidia hasn't dipped. So if Nvidia doesn't dip and you keep dripping Nvidia at the highs, whereas Cornerstone drips you at the lows for that NAV drip, which is really great, and it buys the market for you at those lows. If you're dripping at the highs of Nvidia, even though you think it's the lows for Nvidia, you're really magnifying your risk there because you're not, you have all your money in a position at the highs, and when it falls, you're going to lose your shirt. But B, you have no money to buy the dips because you haven't been using your dividends to pay down your margin and build your equity. All right, so we have over 300,000 of available withdrawal. Our account value is 1.4. Yesterday we were up 18,000. Today we're up another 27,000, and we got our dividends last night. So we're already up from 1.4 to 1.46. All right, thanks to compounding. And again, I have so much of my money in Cornerstone, my portfolio in Cornerstone, that we're able to get these outsized gains because yesterday Cornerstone had an incredible day. So we're getting those compounded gains. All right, we're getting them, and we're getting these days gains with Nvidia. But we're not getting long-term capital gains. How can we do that? All right, I laid out Cornerstone for you, and I laid out the triple C's for you, okay? All of that is in my e-guides. You can check out my e-guides at my website or rewatch the video for more specifics. Okay, then I have for y'all, and then we talked about dripping on dips, which works a little bit, but you can't really compound with dripping on dips because, again, you can't buy the dips, trim the rips. You're not going to compound that way, of course. And our dividends, it's so hard to compound your Nvidia dividends if you can't drip every time. All right, so you're going to miss some crucial days where you're not reinvesting. What if Nvidia has a huge move up, okay, and you miss one of those historic moves? You know, some of the market, they say in the market, the largest moves happen, you know, the 60% of the moves for the year happen on the 3 or 4 biggest up days or something like that. So you have to be careful. You have to be fully invested, as Buffett says, and that's what we are. We're fully invested in the indexes. And you can't be fully invested in Nvidia because it has high maintenance. It is a stock, and it doesn't compound for you. So it's risky. So how can you do it without dripping Nvidia? Well, the next way that we have obviously done this is through, which one should I say? I have 2 ideas for you. I'll go ahead and say the Superb 10. All right, we have laid out this new Superb 10 strategy. We've really been killing it, okay, with our Superb 10 strategy. Okay, we take something like Nvidia and we go to NVDL, okay, with Granite shares. So we're at 4.5% in NVDL. Did it make it back to the old highs? No, it did not. But if you hold this long term, it will eventually make it back to the old highs, okay? So a lot of people say, well, leverage ETFs are risky. Only sector-specific ETFs and ETFs that are linked to volatile sectors. If you go with the indexes and you go with top names within the index, like an NVDL, then you won't see that erosion. Okay, you see this erosion now. All right, well, let me just show you, let's just say SPY, okay, the S&P 500. We go to the S&P, look, it's back at the highs. Now go look at UPRO. UPRO is the triple, one of the triples that I use. It is not back at the highs, but look at an all-time time frame. It blew past all of the old highs, unlike with Soxel. All right, so that's why you have to use the right triples. They're all in my Volume 7 e-guide. Look at Soxel did not make it back to the old highs, whereas Nvidia and Broadcom did. So you have to use the triples right. You have to watch their maintenance. You have to understand how to delever out of them and build into them in corrections. It's all in Volume 7. So, and also, UPRO blew away SPY over a 10-year time frame. If you go to Morningstar and you go look at what UPRO did, it made you hundreds of thousands of dollars over 10 years versus SPY made you a measly 45,000, which is actually great because 10,000 turned to 20 and 20 to 40. You can't complain with that, but it's still hard to survive, okay, and live and beat inflation and live financially free with 100% return, 200% return in the S&P if it's growing over 10 years and it's all locked up in an IRA or a 401k and you can't use more margin to really add fuel to that fire. It's really hard to still get ahead. And they're not giving you dividends. They're just giving you capital gains. So you're not able to take the dividends and live off them like you could with Cornerstone. So it's really tricky. The only way to really do what we're doing here at this channel to get this kind of outperformance and to live financially free from 9 to 5 is to use margin. You have to use some margin, which is all in my Volume 3 e-guide. We talk about maintenance and how to use margin in Volume 3. You have to use some margin. You have to do it safely. And you have to buy the indexes. And it can't be YMAX indexes because YMAX indexes don't compound. All right. Now look at YMAX, for example. YMAX, I love it. I have YMAX. I have all the YieldMax funds, but it won't compound up for you either. You're just getting these dividends. So you're getting great dividends, but you can't reinvest those dividends and compound them either because you want to wait for a market dip. Okay. Cornerstone automatically drips the dips for you. All right. So that's why Cornerstone is such a huge advantage. Okay. And so anyway, I've already said that 1,000 times. Now back to what we were saying. NVDL, it doesn't decay. I just showed you. It looks like it decays on the chart here, but wait for a long-term time frame, okay? It won't decay if the underlying doesn't decay. Same for the indexes. Now Soxel, it decays because many underlyings within Soxel did not make it back to old highs. Many of them, like many of the smaller ones, look at a Micron and stuff like that. All right, so you have NVDL, but be careful with NVDL. It's 100% maintenance. Beware, it sucks up 100% of your equity. So you have to use these properly, which you can see all my allocations at my membership section at YouTube. Okay, this is where you go see my private portfolio. People think this is a trading service. No, this is not a trading service. All my videos are up from the past. You can access any of these videos. All right, these are all members only videos. You can access them at any time. So you can see how I played the crash. You can see how I played the Cornerstone rights offering. You can see all of that there in the membership section on YouTube. And you can see how I allocate these superb 10 names with Yieldmax. And that's the fourth way to get your compounded gains. All right, so I just gave you 3 ways, including how to drip, but we talked about how dripping wasn't that great with Yieldmax as compared to Cornerstone, where you get dripped at the bottom for 20%, 18% gains now every month. Okay, so Cornerstone, you have to do it, but don't just buy Cornerstone and go away and then say that you bought on my recommendation. I don't give recommendations. I don't give advice. I can control, my highs and lows, and I can box Cornerstone and control my maintenance however I want. So Cornerstone is very important to me, and you just have to make sure you play it properly. All right, and I gave you the fourth way to compound your gains, which is through compounding with the superb 10 names. And we also have some other names in there. So TSLL killed it yesterday. For example, TSLL was up like 19% yesterday. It's down 4% today because it was up huge yesterday. Look at this 5-day chart. Went from 12 to 15%, $12 to $15. But TSLL and Nvidia, again, they have high maintenance. Just be aware of that. That's in volume 3 if you need help understanding maintenance. So we did this with the Mag 7 names. We attached these leveraged vehicles to the Superb 10 and Mag 7 names, and we added some other names in there as well. They're all in my membership videos, and we allocate them properly to where they don't hurt us going down, but they'll make us a lot of money going up over the long term. And on the day's gain side of things, we absolutely blow away the market. We're up 27,000 today, or 1.5%. If you look above, that is really destroying the indexes. We're up 1.86% now. Okay, if you refresh this tab, you'll see we're up 1.94%, 1.94, and the NASDAQ above is up 1.57. So that's almost a half basis point that we're beating the indexes by. So you see that we're up 11% for the year. So tomorrow you'll see that we're up 2% more. So we'll be up 13% for the year tomorrow. All thanks to these ideas that I laid out in this video. If you're just now joining this live, go check out the video before that. I gave you 4 ways to maximize your returns on the cap gain side with Yieldmax. The last way to do it, and I know I have my members here. I want to check out all my comments. I can't wait to get to y'all's questions. I can't wait to see y'all. So here are our sold options, some of them. And you can see that we're up massively in some of these plays. But I'm not worried about these gains, okay? So this is where I get my last bit of compounding. It's from selling options. That's all in volume 6. Selling options is one of the best ways to get easy performance, okay? Because you lower your margin by 50 to 100,000 like we've done with Bitcoin alone. We've lowered our margin by 50,000, okay? 20, and call this 5 here. Call that, but we've made 5 and 5. So we've made 50,000 off BitX alone from premiums, okay? And then our account will grow by 50,000 towards expiration. But I don't really care about that. I care about lowering my margin by 50 grand, lowering my interest, which is not a problem because I've negotiated my rates down twice to under 5%. Many of my members did the same thing. When they buy my e-guides, they get my phone number. And you get Discord access for free for life. So that's the real benefit of buying my e-guides. What I was saying was you need to sell options. Okay, Warren Buffett sells options on Coca-Cola. All the greats use debt to get ahead, as I said. Even Warren Buffett, even Elon Musk, he uses margin to buy X. And then Warren Buffett, he also, by the way, uses margin and equity to buy his other companies. No one ever talks about that. But he sells options. He made $7 million, I believe it was, on Coca-Cola just from selling options. You're just selling time. You're just selling volatility. It's the safest way to do it. The way I sell my options, it puts my cost basis so low, the stock would have to drop 50% for me to get assigned, and then you would want the assignment because that's how you make capital gains on the way back up, okay? Compounded capital gains on the way back up. So if we don't get assigned, then we just collect the premium, just like what Yieldmax does. You sell the time, you sell the premiums, you get income. It's paying for your way of life. It's lowering your margin. It is great. But if you get assigned, and they're giving us performance, days gains. I want the days gains performance, okay? I want really the sold puts for 3 reasons, okay? I want days gains performance to engineer my days gains, okay? That's how we got 25,000 today. We're up 25,000 right here where my mouse is, because we're up 1,600 in Soxel and 750 in BitX and 275 in TNA, and you could go up the list with all of our other options. So that's about 5,000 in itself, okay? And you put 5,000 with the sold options. and you put 5,000 in days gains from the Superb 10 section, and then Cornerstone, and then Yieldmax, then you have $25,000 worth of days gains, especially when you're using some margin. That's the last piece of that puzzle I just laid out. These engineer my days gains to get them to 25,000, but we're not just getting days gains, we're getting compounded gains for the year, okay? Because we're not going to just have our ex-dividend dates drop our account and then we get a supplemental paycheck to live our life free from a 9-to-5, which is excellent, but we want compounded gains. We're getting that from the triple C's, which is in volume 7, and then we added Superb 10 as a twist to that volume 7. All right, so email me for my e-guides at akintod48@gmail.com. If you need help living financially free out of your brokerage account, you get my phone number and Discord free for life when you buy my e-guides. Pat, I thought the update today I wanted to give you in particular was the numbers around Nvidia, okay, and how it's a real shame when we're buying Nvidia that we're not getting the compounded gains. We're getting these dividends from Yieldmax, but not the compounded gains. And, to get that, when the markets only give you 7 to 10% per year, Pat, and, we're withdrawing 5, you're not saving enough. You're only saving 2% or so. And so Nvidia is how you get the real gains, but you can't get Nvidia because it doesn't compound. You can't get gains from Nvidia because it doesn't compound. You need gains from Nvidia. But then you can't put all of your money in Nvidia because it's one stock with high maintenance. Even if it has low maintenance, you can't go to another broker and put it all in Nvidia because you have headline risk and it could lose. So you have to put it all in something, and that would be, once again, the triple C's. And I'm going to always, pound the table on Cornerstone and the triple C's, and my members support me because they say it's what makes me different and so successful. So of course I'm going to do it, and I appreciate my members supporting me. But I just wanted to work backwards through an example with Nvidia on how it won't give you those gains. You can't even drip it, okay, as we discussed in this video. All right, you can't drip it consistently. You can only drip Cornerstone consistently for instant gains at the lows. Brian, you're getting crushed on your 26 covered calls of Nvidia today, down 168%. Well, covered calls, that's why I don't like covered calls, Brian. I only like to sell options, sell puts. I do not sell calls because you have that problem. When I sell options, that's strictly on the put side because I've told members this in the past. When you have calls, it's a red in your account. It's annoying when you're seeing the market up and you're down in the sold calls. You have call away risk, and then you have all the carry risk. If the market falls, you only collect a little premium, and then you still have to hold all of that Nvidia or whatever it is, Nvidia. So I hate selling calls for those reasons, although they are very enticing. I sell puts because they're safer. You don't have that call away risk. You only have the risk of being assigned at the lows, which is when you want to buy, okay? T. Washington, has Cornerstone really been around since 73? Wow, yeah, it's been around since the 70s. I like to say 80s to be sure, and 70s, yes, I've heard that, and they're one of the largest closed-end funds in the world. And for all the reasons that I said in this video, Cornerstone is a big part of my portfolio. Just make sure you play that properly. That's all in Volume 4 and in our Discord, okay? Make sure you see how we all play it in our Discord. Hey, Wreck-It Ralph, aren't you up for a Pulitzer for Volume 7? I wish, Wreck-It Ralph. I think it could be. I appreciate everyone's kind words on Volume 7. If you don't want to do it for me, do it for Navy. Like this video, please. Hey, Fitz, how do you get Discord access? Great. You just buy my e-guides. Pick any bundle, not any e-guide, but any bundle, and you get Discord for life. 1984, hello everyone, it's Farmer Rick. Hey Rick, love the content. Thank you, Rick. All right. I drip nothing. I buy what I want if it's appropriate. Exactly. Drip selectively. We can drip Nvidia for those compounded gains, but it's really hard to play that without the risk and time all that. It's difficult. You can't drip Nvidia for the gains, capital gains, or the dividends. Although Yieldmax is great, you use it for its own advantages, like we said in the video many times. KOTM, hello Todd, first time commenting here. What are your thoughts on a portfolio consisting of ULTI, YMAX, YMAG, RET, and QDT? Am I diversified enough? I would say, I always tell members, head over to my membership section on YouTube and you can just match your allocations to mine, okay? I have all of your names. The question is, how do you allocate them? All right, so I appreciate your question. I appreciate your comment, KOTM, and I would just say I have them, but allocate them the way that I do. You can mimic my portfolio there. Beast, dripping is good for permanent long-term holds as long as your margin is getting paid off while doing it. If, for example, I drip Schwab D, let the dividend aristocrat kings that are retirement stocks, Yeah, you can drip beast in an up market, but remember, in a down market, it kills you, and then you won't have any money to buy in a down market. As you were saying, you didn't have the money to buy in a down market. That's because you're dripping all the while in an up market, which can pay off, but it's like, it's risky. It's like using margin, in my opinion, using extra money to buy as things are going up, and you get slammed on the way back down and have no money to buy the dip. Thanks again, Daniel. Yeah, everyone like the video if you're watching, okay? Please like the video. I already brought Navy in here, all right, as a way to kind of put some pressure on you, all right? So please like this video if you haven't already. Like and subscribe. Supreme, you get Discord when you buy the e-guide bundles. Fitz, thank you, Supreme, for letting him know. Beast, my margin gets paid down by Yieldmax and Roundhill while my compounding gains are in Cornerstone and Dividend, King, and Aristocrats. Exactly, Beast. That is 100% true. Cannot disagree with that. That is the system right there in a nutshell. Amen to that, Beast. Fitz, where do you buy the e-guides? You can either go to my website right here and you can explore my e-guides on my website and see all of our testimonials, which I already have pulled up. They're running during this video. Or you can just email me at akatodd48@gmail.com. Thank you, Bobby. Really appreciate you, Bobby. SR, welcome to Todd's Fire Portfolio. SR, thanks for joining. Okay, so welcome. All right, welcome, SR. I think you're going to really enjoy this community. All right, you have Discord, but I think this membership community is a little more nuanced. And thanks again, Bobby. All right, we'll be talking soon, Bobby. Hey, Mike, NVII thoughts. I like it, but it's not going to give you the compounding that you want with Nvidia. Okay, if you want the growth from Nvidia, it's a real travesty just to get it through dividends. I'd rather get it from compounding the capital gains. All right, so not for me, but I still think it's a great vehicle that will make you money, just not retire, in 10 years kind of thing, like you could have had you bought 10,000 of Nvidia 10 years ago. Unless you reinvest those dividends all the time, Mike, but we just discussed in this video how you can't do that. It's almost impossible to do that perfectly without the risk. Buy assets, MST, PLW, PLTW thoughts. I like them. I want, more exposure to these mega growth themes in the market, buy assets, but we have a way to play PLTW that's blowing away, Palantir, it's blowing away PLTW in my opinion. That was all in a couple of videos ago, and you can see in our memberships section all of my allocations and how I play Palantir. Jordan, Todd, what does the e-guide bundle cost? It depends on which one, Jordan. We have the silver, you have gold, and you have platinum. Okay, silver, gold, and platinum, and you can see all of those options here. Okay, if you just go to learn more, get started, you can see all of the bundles there. Make sure you don't buy the e-guides individually. There's no point in doing that. Just go to the bundles, and then you can get the e-guides for a much better price, and you get Discord and my phone number free for life. Supreme, got to get Volume 7 now. Yeah, I didn't know if you didn't have Volume 7. Yeah, all of my members who bought my e-guides get Volume 7 half off. So just remember that, Supreme. Email me and I'll give you the half off discount. Buy assets. So MIST and PLTW are not good for long-term holds then? Not in my opinion, because they decay. Look at their chart, buy assets. They go down on a chart. They're great for returns, great for daily gains, but not long-term compounded capital gains, which is what this whole video is about. And watch this video from the beginning if you do not see those ideas. I appreciate you too, buy assets. Hey, Vanilla Man, welcome to Todd's Fire Portfolio. All right, buy assets says Ulti since it seems like a bit better now than it's weekly. I love Ulti too, and there's a way to have all those with your daily gains and your compounding power. Ulti was up nice for us today, but it doesn't move up for us on a long term, right? So you just want to make sure you're getting best of both worlds. You want dividends. You really want best of three worlds. Dividends, you want days gains, and you want long-term capital gains for the year. And we described how to do that in this video. All right, once again, if you like this video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.